Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon is Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial. We're here to discuss Nasdaq-100 seasonality trends for the second half of the year, when the index has been strong over the first half. It's great to see the both of you, as always. And Russell, let's discuss this from here. I mean, there was really solid performance in the first half for the Nasdaq-100. Yes, we know it was concentrated from a seasonal perspective. What are your expectations going into the second half?
Like to look at what the calendar's done, what has happened in the past relative to what's happening right now. We're up, I don't know, 16, 17% on the Nasdaq 100 as of this moment. What I did was since we've got the Independence Day holiday coming up, I took a look at what does the market do leading up to Independence Day and what does it do afterwards. We've had 10 instances in the past 24 years where the Nasdaq 100 has been up 10% or more leading up to the 4th of July. I think unless we get a 7% sell-off in the next 2.5 days, I think we're going to be okay with that one. But it turns out every single time, all 10 times out of those 24 observations, that the market was up more than 10% leading up to the Independence Day holiday, it was higher for the rest of the year, from the Independence holiday through the end of the year. In fact, the average return is almost 14%. There were a couple of years that we had returns that were under 10% as of the middle of the year through the end of the year. But for the most part, if the first half of the year is bullish, the second half of the year seems to be very bullish as well for the Nasdaq 100.
Yeah, I mean, that'll make a lot of us going into the end of the year happy with the way the portfolios look. Dan, from a volatility perspective, any discernible trends you can highlight there?
Well, yeah, Jill, I think there's a couple of things here as we move through the second half of the year that, seasonality being one of them. It's not uncommon for the VIX and the volatility to reach its lows in June on a seasonality standpoint. And again, that really is what has occurred this year, as we are now seeing the VIX now trading basically near the lows of the year. You're looking at realized volatility continuing to decline and hitting some of the lowest levels I can remember. And both in the short-dated realized volatility, say 10-day realized volatility at 7.5%, 30-day realized volatility down to 7%. But even look at it, 10-day realized volatility over the last 10 trading days from close to close, it's at 4.5%. So that's going to continue to keep pressure on implied vol levels as options traders can, just can't hang on to the decay factor, waiting for the market to move. But as I mentioned, this is typically the low end of the period. July typically is a positive month for the market, but we do see volatility historically pick up, and particularly this year, an election year, as we move towards the election.
Yeah, it's so interesting, Dan, because when we spoke last time, I believe it was June 3rd, we were looking at it and it felt as if there was something potentially bubbling up underneath the surface, because it really was a little bit too quiet going into the summer months. But I mean, even if you look at the intraday patterns, it seems as if there's a little bit of volatility, a little bit of sell-off at the open, and then it just continues to get bought for the most part throughout the remainder of the day.
It does. Yeah, there's continuous buying here. And even today, which is very interesting, Jill, when you look at the price action with Treasury markets now selling off, and we're seeing yields going to the highest level since the beginning of June. And yet the market is still holding up here. And the tech sector, the Nasdaq 100 is another factor. You're seeing that really not being impacted too much by the higher yields to this point. So, that is a very interesting outcome as far as the price action here. But, the dispersion, I think, is something that eventually is going to come home to roost. And what I mean by that is just the single stock dispersion. We're seeing significant volatility, particularly in the Mag 7, yet the indexes just aren't realizing that much volatility in totality. But that has a tendency to work its way into the markets, and particularly the second half of this year. As I pointed out, I think we'll get into earnings season. That's going to create the possibility for an increase in volatility as we get into August. I think July will still probably remain somewhat subdued. But overall, when you just look at the general trends, Jill, we just haven't had the moves from an index standpoint that are necessary to really create a bid in volatility.
So, Russell, if we look at this from the historical data that you have pointed out earlier, and you want to, think of a way to trade this, right? But you don't want to go in necessarily with no protection. I would imagine you'd be looking at spreads here to, capitalize on this.
Absolutely. I mean, I threw out a whole bunch of bullish numbers there. But if you look around the world, it doesn't feel like we should be so bullish.
It's true.
You mentioned the volatility bubbling up a bit. People we're all ugly Americans here, but there's some real stuff going on politically over in France. They just had a first round of an election. They think it may not turn out as bad as people thought. With the second round this coming weekend, but that hasn't impacted our markets at all. It's impacted their markets tremendously. What I find really interesting is just from a volatility standpoint, then we'll look into the second half. From a volatility standpoint, did anybody notice that in the markets, it seems like we didn't even notice that there was that debate that everybody's talking about, on all the social media. I don't want to get into the politics of that, but you think that would be somewhat of a volatility catalyst. I think Dan's right on the mark there with volatility is probably not going to kick in until a little bit later in the summer as the election is still very far off. You had a lot of people saying that the election would suddenly become forefront after the first debate. I don't think that happened. As far as the second half and playing what I was talking about, if we do, I love this number. If we do the average second half after we've been up 10% in the first half, that's going to put the Nasdaq 100 around 22,500. So we're breaking out the NDX 20,000 hats. But I do question maybe playing the index purely unless you do it from a spread standpoint and limit your downside. What I'm actually doing is I'm going through the Nasdaq 100 stocks that have underperformed. And as Dan just said, and he kind of gave me a layup there. You're going to see something come about from all of this, and it's probably going to be some catch up from the laggards. I mean, poor Intel, for goodness sake, who is the NVIDIA of my generation, is down almost 40% this year. I mean, you hate to say it this way, but how much more can it go down? So I'm looking at stocks like that, Nasdaq 100 stocks that have underperformed, because I do think tech will hold up through the end of the year.
Yeah, Dan, it sounds as if you have some follow-up there as well.
Yeah, I mean, I think I tend to agree with pretty much everything Russell talked about. I think one thing that I think is interesting, as you pointed out, the debate and the fact that the results, and the kind of the take on the debate was pretty dramatic, and yet it really did impact the markets. But one thing we did know who the participants were going to be. Now that still might be up for question as far as from the Democratic side. But nonetheless, I think the idea is that the policy and the House and the Senate are going to kind of remain somewhat the same no matter who's in leadership. Now, is that the correct interpretation? Maybe, maybe not. But I think that that's kind of how the market's viewing it right now. They kind of know the players on the field, and they're okay with the various scenarios at this juncture. But again, as we get closer to November, and I think you just look at the pricing structure, and also what's interesting, Russell, I don't know if you did see this, but we did see some pretty sizable trades in the VIX here in the last couple of sessions, rolling a position from September, so before the election, to November, which is going to be post-election because the November futures and options take account in for December. But again, big rolling of positions and gaining access to the VIX at the 40 strike in November, where we've seen about 125,000 contracts go up here in the last couple of days. So there is some belief out there, I think, and rightly so, that we're going to see us come off these low levels. And when we do, we've seen it in the past, it can really increase dramatically in a very short order.
Yeah, Dan, it's interesting that you had made the point that we know who both the players are here in, the national election scenario. We know that Wall Street perceives Trump as more business friendly and less restrictive, and then it's kind of on the opposite side when it comes to Biden's policies, although they really didn't get into policy. So I wonder if the market interprets that is it'll kind of go back to business as usual, or perhaps the business environment will revert back to something that looks more reflective of how it was from 2016 through 2020. I mean, that's the only thing that I can think of. I mean, it's interesting they didn't talk about policy at all, but that seemed to be the most clear outcome at the end of the night. But to your other point, when you look at some of the anecdotal trends that we're seeing, I mean, outside in Times Square, it's back to 2019 levels in terms of tourists being in the city, as far as what I can see. And it feels as if, there's more of a trade out there besides tech. Why not look at other areas such as, travel and services and energy and so forth? I mean, there's got to be more going on besides what's happening in a handful of stocks. It still seems as if the consumer is strong and they're spending.
Yeah. I mean, that's the conundrum right now, as we're continuing to see areas where you would expect to see an increase or have a spillover effect into the vol space that hasn't necessarily had the catalyst or the confluence of events yet to create a shift. But this when we see the levels of the VIX at this low levels, this is historically low levels. There is a period of time where you continue to see the fading of that, and that's something that's unfolding. So the more that builds, then there's an opportunity for a trend change. And what I mean by that is compression of the VIX futures. We're looking today, for example, VIX futures down pretty much 35 cents, 20 to 35 cents across the board, VIX cash unchanged. So we're seeing some of the premium coming out of the weekend risk premium coming out of the futures. But that compression level now, where you see the VIX cash get up around 14, the VIX front month future goes to parity there. That is a historically low level as well. So again, there are sellers of vol when it comes off the mat, when we see any kind of downside in indexes. And eventually that will catch up with the market, and we'll see, when the trend does change, if I could speak today, that, it can be very dramatic, as we've experienced over the many years. And Russell and I have studied this for a long time. And it does feel, as we go towards that election, that it is underrepresenting to some degree the possible scenarios, even though the October futures still got a huge premium in it. I still feel that it's underrepresenting the potential outcome.
Yeah, I feel like situations such as this makes me more nervous than what you would anticipate when there is an elevated, VIX. You already know what the unknowns are at that point, but now I feel like it makes you
There you go.
a little bit more nervous. All right, on that happy note, appreciate your insights as always. Have a great rest of the day, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.